Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. As I do each and every week, I leave my lines on the chart from last week's report so you can see how the forecast worked out. And right here, it's hard to see the red line because it's going through all of those red candles, but I drew that diagonal line to the downside last Friday with my target ending at 447.63. And obviously you can see today we hit that target and went beyond the 20 period moving average. Now this is important for you to pay attention to the volume here, because the increase in volume on the way down tells us that the sellers are becoming more motivated. And today we did a hard cross below the zero line on the CCI, which is the momentum line. So for next week, I think we're going to see lower prices to start. I think we're going to see that selling continue into Monday and Tuesday. And then we'll have to see whether or not we get a bounce. It's too early to tell because that bounce would depend on a drop in volume as the prices are moving lower. There's a lot of reasons why the markets have sold off, especially towards the close, one of which is tomorrow marks the 20th anniversary of the 9/11 tragedy. And with that being on a Saturday, with all that's going on, investors may have moved out of fear, or maybe just taking some good risk management strategies in order there. So I think that we're going to see lower prices. Keep an eye on that. My downside target is 443.27, and that's for SPY. Now, on the other side of that, the VIX, which for the most part is inversely related to the S&P, you can see that this is the line that I drew. I'll highlight that with my magnifying glass there. This is the target right at the end right there. We hit that on Wednesday, formed a long shadow candle here, which almost represents a hanging man, but lo and behold, what happened today? Look at that. We blew past these highs with an enormous bullish engulfing candle. Now, when you're looking at a candle like that, it's the candle that takes top priority over the oscillators. So while the oscillators are still going up, I think next week the VIX can continue to go up, especially Monday and Tuesday. And then we'll have to see if we get any kind of a pullback. Again, it all depends on the volume drop on the S&P. If the volume drops on the way down, like I said before, we could see a pivot point forming. So the opposite would occur here in the VIX. If we see a drop in the volume in the SPY, we could see a pullback or a pivot point to the downside. But right now, putting my upside price target on the VIX at 22.26. With my longer term target, if you've been following along with my weekly reports, you see my longer term target right there is 27.31. So it's very interesting how the VIX is really starting to pivot higher. Even on the weekly chart here, this is very, very close to a bullish Marabuzo. That's when you have no shadows whatsoever on the candle. We started off right on the low. If the VIX had gone any higher today, there would not have been a shadow there on that candle. But that's a very pronounced candle, and you could see in comparison, it's very close to some of these big candles that we had recently back here. So that is for the VIX. Now, if we switch and go to the diamonds, we hit on most of our targets from last week. The diamonds not only hit the target to the downside here, which was a gap fill. I'll zoom in for you right there. See, this support level right there at 351 was a gap fill support. But we moved all the way down and very close to filling this gap to the downside at 345.95. Now, because of the increase in volume down here, see that? The increase in volume, again, is telling us that the sellers are motivated. So I think we're going to see that continuation of selling pressure come in Monday, Tuesday, maybe even into Wednesday before a bounce. So again, like the S&P, we have to watch for a drop in volume. We already have 4 red candles in a row. If Monday and Tuesday turn out to be red, obviously that would be known as a stale red light. So the drop in volume on the way down would tell us that the sellers are getting tired. Now, I'm still not going to be taking any big long positions, although our equity traders took some long positions this week in individual trade candidates that are doing very well. We would pick and choose long positions, but we are very, very quick to get out, especially when stocks start breaking out below key support levels. So that's my forecast on the diamonds. Again, 343.78 to the downside, and that's what we're looking at there. Now, IWM, this is what we're talking about right here, where this is where technical analysis is just so amazing. This was a 2-week forecast where I did 2-part forecast calling for a pivot point up around this level, and the market turned right on my pivot point. Pretty incredible. And even now, it's following that forecast line to the letter. This was a bearish engulfing candle in IWM with hardly any shadows above or below. The volume is lower here, right? However, we have a cross below that momentum line on the CCI. You see that? So that could be interesting because usually we get 2 to 4 more days of downside momentum, hence the reason why I'm just going to keep this target in place. We have a downside target there. Now remember, to reiterate, on May 21st, I officially went on record for calling the top on IWM. And I keep saying this because I want to make sure we're very clear on this. Did not call a high, I called the topping pattern. And I said it's going to take about 3 months before that topping pattern completes. We're a little bit overdue on that topping pattern, but remember, if you're a member, our trigger point is going to be a close below 210. A close below 210 will more or less break us out below this sideways trading channel that we have going here in IWM, and we're already down below the point where I officially called the top on May 21st. Now, with that said, I'm going to do a similar forecast where one market at a time, I'm going to start labeling tops. I'm going on record today. Again, this is September 10th, and I'm calling an official topping pattern on the diamonds. Why is that important? Because here we go. This is a weekly chart, and that blue line right there represents the 20-week moving average, which is very close to a 100-day simple moving average. And the volume is increasing on the weekly with a very, very close call here and almost across below that momentum line on the CCI. We've officially crossed with a sell signal on the stochastics right there. So again, going on record, September 10th, calling an official topping pattern on the diamonds. Again, this is what I have been doing for years. Most of the time I'm early on the call, but I'd rather be early and be wrong than late and left holding long positions at the top. So again, my emphasis here is on risk management. Please be sure that you are limiting the number of long positions and not committing too much capital to a long or bullish strategy. I am not a big fan of margin, although the brokers would love it if I promoted margin accounts for them. But I don't think borrowing money at the top is a good idea to finance long positions. Leave that up to you. It's your account, it's your money, and you determine what kind of risk you want to take. But that's my advice, and I think it's pretty sound advice. Just watch out for the downside. Make sure you're using good risk management skills there. All right, let's go on to the Qs, QQQ. Again, this one was resisting. I'm not calling an official top on this one because the Qs are probably going to be the last one to fall. However, if you look at what happened today, we have a big red candle, higher volume, same story over and over with all the markets, oscillators crossing. I'm keeping this target, which is the gap fill target right down there, keeping that target of 368.15 on the Qs in place, not moving anything out, just announcing that downside target as a gap fill, and we'll have to see what happens next week. Now, I'm going on to a regular rhythm of calling the market on ETH. This is Ethereum because we have a lot of crypto traders out there. Last week I said we would most likely pull back on the Ethereum with my target on that was 34.76. Look at that. Not only hit the target, came back down at a moving average right here. This is a roll reversal support level, right? Former resistance here and resistance here most often turns to support here. However, we have a slight increase in the volume as we're closing below that moving average. So what I'm going to do is I'm going to erase all lines. Now that we've hit the targets, I'm going to redraw where I think the next key support level is going to be. Right here, that is an open gap that will act as a gap fill support level. So I think Ethereum still has a little bit to go on the downside before it bounces, and I'm going to do a two-parter for you there. I think it's going to hit 2908 before we see the pivot point, but I think the crypto market could be a place that may not be directly related to the overall markets. We might be surprised and see an inverse relationship pop up, but again, I'm not calling that one too far out. I'm just letting you know there's support level down there, and that I am also accumulating a position as a scaled in approach. So that's it for now. You have a great weekend. Enjoy it with your families, and I will talk with you next week. So long.